when you see these kinds of movements where the paper price gets driven down and there's tremendous physical buying, it should be eye-opening. There's a battle going on right now where this could end up being one of the biggest delivery months, one of the top 3 biggest delivery months ever, and at the same time, it's getting hammered.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 27th through November 3rd, 2025, while supplies last. First this week, 1-ounce gold Valcambi Combi Bars that can be broken into 10 1/10-ounce bars are just $215 over spot. Next, 90% constitutional silver is just 30 cents over spot per ounce. Finally, assorted silver rounds are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest for our weekly market update. Every Monday is Andy Schectman, the CEO of Miles Franklin Precious Metals, who's joining us this Monday, October 27th, 2025. Andy, as always, thank you for coming back on Liberty and Finance.
Good to be here, Dunagun. Nice to see you again, buddy.
Our viewers and subscribers and I always look forward to our Mondays together. And there's been a lot going on in the metals markets that we want to get an update from you on. There's certainly, after a multi-week, one could say multi-month run-up in both gold and silver prices, we've had a healthy pullback here in the midst of a bull market. A lot of the analysts whom we interview on our channel see this as a normal and healthy sign of something that happens during bull markets. And for those who do make incremental additions to their acquisition strategy, that's a natural opportunity to acquire on pullbacks. But wanted to get your experience viewpoint of that going forward, and just grateful to be here. Frankly, myself, I had a major incident happen last Wednesday afternoon. I was the victim of a hit-and-run, head-on collision. An individual decided to use a dedicated turn lane as a full-speed bypass lane that ran right into the front of my car at full speed and ignore me honking at him ahead of that impact. But whether you love him or hate him, the airbags probably saved my life. And our car looks absolutely horrible. We'll need to replace it, but grateful to be here. And it kind of left me with the lingering awareness that no matter what plans you make, things can be just swept away in a moment without your permission. So just make the most of every moment. Every day is a gift. So.
Oh, I didn't know that, Dunagun. I'm glad you're okay, and you're right. Tomorrow is never guaranteed. You would think that guy would be caught pretty hard if the police put it out to all of the body shops, look for a head-on collision vehicle. And
oh, it got more interesting than that. The impact was so severe, there was no chance he was going to drive away from
ran.
this.
He literally ran away.
It was a hit and flee type of a situation, and it was actually the crowds there were pointing. He went that way. He went that way. The police caught up with him. Tried to detain him from fleeing the scene of a crime, ended up getting the person got attacked who was trying to detain him, had to tase him. So it was a escalating series of missteps on that individual's part. But I'm just glad to be here.
Yeah, that's not a very well thought out escape plan when you leave your car with all of your who you are attached to it. And so that belongs in the dumb criminal, the world, America's Dumbest Criminals episode. But I'm glad you're okay, man, for sure. And good to be here with you. Even better knowing what you went through.
Yeah, thank you for that. And I didn't mean to, I didn't want to bring that up later, but I thought it was worth mentioning that it really gave me and my wife a lot of perspective in the last few days of treasuring the moments and not putting off things that are important and just, I guess, embracing each day. So grateful for God's grace to be here. We're a guardian angel watching over me, and looking again for your insights on what's going on in the broader metals markets. And you can take that from the top of the food chain of supply demand down to the price action, or you can talk about what you're seeing in the retail bullion market. Come at it from either end, but we'd like to get a complete end-to-end coverage.
Yeah, I mean, here we are on Monday, and I won't know until tomorrow or later tonight what has precipitated this last pullback. We'll talk about last week's pullback in a moment. and some of the things that I found interesting about it. But I mean, look, first and foremost, the long-term case for gold and silver is crystal clear, as far as I'm concerned. You have central banks, foreign governments will continue to buy gold and silver now, unless there is a fundamental change in the attitude of this country, in particular Congress, towards the U.S. budget deficit and the nonstop continued deterioration in our fiscal condition and our fiscal sanity. Our fiscal irresponsibility is off the charts. And you can see that by the continued shutdown of the government. And I think there'll be volatility. Look, this is a game where, largely because a lot of things that we've been talking about since 2020, when I started talking to you about the deliveries that we saw, those were the beginning signs of a system that is all about paper promises, rehypothecated paper promises coming unraveled, where countries and sovereign wealth funds and very plugged in individuals and groups realize that it is indeed the Achilles heel of the entire system, and they would rather, I think, slowly exploit the metal and the commodities out of the system before there is a mad dash for them. And you know, a lot of people in this country, instant gratification isn't fast enough, and we've seen that with the rise and proliferation of cryptocurrencies and stocks like Nvidia and Apple that have defied gravity. One would say, well, why don't they just come in and buy it all up? And because you would see the strains that we're seeing right now in the LBMA, you would have seen them blow up instantly. And so this is a something that is not only coordinated, but also methodical, very well thought out, and done so little by little. But I think that when you see the stuff that's going on, where in October already, almost 39 million ounces of silver have been delivered to the COMEX. The phrase is issued and then stopped, which means taking delivery. Whether or not they leave the COMEX is irrelevant. It's relevant because this is almost triple what was posted for delivery in October on the first day notice. In other words, most of the people who stand for delivery on COMEX will do so on the first day notice. But what we have been seeing is deliveries, like in gold, that are 93% higher for the month than posted on the first day. This is contracts that are bought during the delivery month that instantly deliver, and they're much more difficult to analyze when you're trying to look at the Commitment of Traders report. But it's also very bullish in my mind. And as an example, between October 17th and October 20th, which I think would have been Wednesday to Friday, 6,000 contracts were written for immediate physical delivery in gold. And each of those were daily records for this point in the delivery period. And so, in essence, what we saw in my mind last week was driving down the paper price and immediately delivering contracts for the current month. They would drive down the December paper price, the futures, and stand for delivery and an immediate contract in October. So what was interesting to me about it as well was some of I think it's Michael Lynch, I think is his name, I'm pretty sure. Sorry, Michael, if I got that wrong, but I think that's who it is. And he writes a report dealing with COMEX, and he talked about the footprints that he saw, that the two entities that, first of all, on, I want to say Wednesday or Thursday night, the price was driven down after New York had closed. And it was driven down in between New York and China, Asia, where there's virtually no liquidity, where no rational trader would ever dump metal, copious amounts, all at once into a very thinly traded illiquid market. Period. No one would ever do that. They did. And it's done for effect. specifically for effect, to drive down the price, to guarantee the absolute worst settlement, the way that it should have been done. And when the mainstream talks about this, they neglect to tell you, well, by the way, it was all dumped in the middle of the night or, after New York trading. That would change the outcome. I think it invalidates the valid reasons. It was done for effect, not the way that it should have been done over hours or days, bled through New York where there's great liquidity to ensure the best settlement. Anyways, what I found interesting was he talked about the two big buyers that came in and drove silver price up into the green after being down $1 and gold about halfway up. Because remember, when they drive the price down, the algorithms that control the hedge funds, they're not emotional. And if levels are breached, they just sell. So selling begets selling begets selling. But I found it interesting that he notes that both Morgan Stanley and Bank of America came in and were big buyers of physical as the paper price on the December contract was driven down, which drives the spot price way down. They issued October immediate delivery contracts, which were setting records for massive amounts. Now, the reason I think it's interesting is we've talked about Michael Hartnett and for the lead analyst for Bank of America that has a big high-price newsletter. I think it's north of $10,000 a year for institutional traders. And also the chief investment officer of Morgan Stanley had been in the news lately, where Morgan Stanley says no longer 60-40, 60 stock, 40 bonds, it's 60-20-20. Sell half your bonds, buy gold. And Michael Hartnett says, no, it should be 25-25-25-25, stocks, bonds, short-term treasury, and gold. And so here you have two very large commercial banks. And by the way, Morgan Stanley has been a huge seller of gold leading up to this. And all of a sudden they come in and buy over 600,000 ounces, where you have these big banks who never talked about gold at all, any allocation, now saying as much as 25%. This was done for effect. And it was done either to cover shorts, to take possession of physical, or to rattle the bushes and make people think all of the things that the mainstream said, a lot of which were valid. Gone up 9 straight weeks in a row, was overbought, in need of some sort of a flush. Okay, I believe all of that. And if it had been done properly, the right way over time instead of all at once when the market was liquid instead of when it was illiquid, well, maybe I'd believe that, but it was done for effect. And so I would suspect after I research tonight or tomorrow morning what happened today, we'll see similar footprints in the snow that will talk about, this exact same thing.
I want to underscore two things that you mentioned prior to this, the mechanisms of how the big players do what they do, as you just described. One was, as long as the fundamentals of debts and deficits and runaway debasement of the currency remain in effect, nothing has changed from a fundamental standpoint. That's the mantra we've heard echoed by all of the analysts and experts, including Rick Rule, whom we've interviewed about this topic at this time in the market. But the one thing that you mentioned there was very jumped out to me was the word irresponsibility, because the demonstration of abject irresponsibility on the part of the United States of managing the world's reserve currency, that has real consequences. I mean, first of all, there's the obvious real consequences. Every mom and pop could tell you about how their earnings and savings and retirement aren't going as far as they used to go because of the devaluation of their purchasing power. That's the real world in the street, Main Street USA impact. But you've also told us over and over in the past that foreign holders of U.S. bonds and dollars, this demonstration of persistent irresponsibility is not lost on them, and that they are absolutely proceeding with a dedicated program of divesting themselves of U.S. treasuries and grabbing physical gold in a way that's fast enough to get the job done, but not so fast as to spook the whole market. And that leads to the next point you talked about, is the off-taking, the physical off-taking from the exchanges being done in a way that's sort of on the down low, kind of trying to do this in a more subtle, smooth way, rather than just coming in and just grabbing everything that's on the shelf and saying, just give it to me all. We want all right now, including, you've talked about exchange acquisitions happening directly from miners and refiners around the world. as well as this notion of wanting to do the off-taking on a market in a way that doesn't spook the market and immediately cause a natural reaction of the market going, oh my gosh, that's what's really going on? Because there's a lot of waking up that's still to come, it seems, on the parts of major participants. So those are just two aspects that I thought you touched on.
Well, you can see the reaction by doing it the other way, dumping it, the reaction that it has. It's, oh my gosh. And to your point of fiscal irresponsibility, the U.S. government added $1 trillion to the debt in 71 days last month. 71 days from 37 to 38 trillion just recently. And the interest cost on the debt is mounting at a level where, it's now the largest budget item. And none of this includes the unfunded future liabilities, which are so large and disgusting that I don't know how you pay them off without devaluing the currency. Ultimately, that is how it has to be done, as far as I am concerned. But yeah, this is a deal where the shipments out of both the COMEX in New York, or the shipments into COMEX in New York or out of, some of it stayed in there, will be roughly 38 million ounces this month of silver, and that will put it on pace to be one of the biggest delivery months ever. This is a deal where at the same time you have one of the largest short positions ever on SLV. Over 80 million shares are naked short to affect this. There's a battle going on right now where this could end up being one of the biggest delivery months, one of the top 3 biggest delivery months ever. And at the same time, it's getting hammered. And SLV has an 84 million ounce short position or share, 84 million shares. I guess I don't know if that's ounces or shares. For the last, it's 83.86 million, represents 15% of all outstanding shares. So I guess it's shares. So the shares are being driven down, which affects the price. But yet we're seeing, as they drive the paper price down, massive deliveries in both gold and silver this month. It's a very interesting, hard to decipher market. But when you see these kinds of movements where the paper price gets driven down and there's tremendous physical buying, it should be eye-opening. And at the same time, when you look at, them shorting SLV, it's much more difficult to point fingers at who's doing it when it's not done directly through the COMEX. And you should never be able to grotesquely short, as Ed Steer says, a proxy like SLV, but it certainly has its impact on the price. And again, think about this. We added $1 trillion in 71 days. That's just unheard of, and it's unsustainable. And our debt is rapidly approaching 130% debt to GDP, where other than Japan, no one's ever come back from that. And, the difference with Japan is that, they're not the world reserve currency. They have a budget surplus, and their debt not only is contained with yield curve control, it's mostly owned by the hedge funds, the government, and the people. And so they can get away with it. We can't. And if you're holding treasuries and you see the fiscal irresponsibility mounting, at some point, this debt does become a problem. And the people who point to it not being a problem, I think, are missing the picture.
Well, that's what Alistair MacLeod, our mutual friend who is a former bank director from the UK, says is it's always the domestic users of a currency and of bonds who are the last to flee the sinking ship. It's always the international holders of that currency and of those bonds that are the first to divest themselves of it because they have an objective viewpoint. They have a very pragmatic and practical viewpoint. They say, this is not working. The game has changed. This is not the place to be anymore. We're out. Whereas the people that are living inside the country are always the last to wake up to that for maybe human nature reasons, but also perhaps because of suppression of a story that's not typically favorable to the power of the regime. There's a lot of power to be lost once the reserve currency or the trust in the currency or the bonds is lost. We've talked with numerous guests talking about that loss of trust. Any comments from you on that aspect, either internationally or domestically, before we move on?
Well, yeah, and that's why you're seeing, as an example, China building its own financial plumbing to get around the U.S. dollar system because it's no longer trusted. And, we focused a lot on Enbridge, but the CIPS system, the cross-border interbank payment system, which is China's version of SWIFT, is, in my opinion, the rails to what the Enbridge system will be. It's over 185 countries already are using CIPS to settle, including the Asian countries, which we've talked about before, which are 35% of global GDP right now, and China's biggest trading partner, twice the population of the United States. But the kicker is that once countries accept payment in yuan, like Russia sells oil or Brazil sells soybeans, they don't have to just sit on stacks of Chinese yuan. Through the Shanghai Gold Exchange, those yuan balances are actually convertible into gold. And this means that exporters who don't want to hold yuan can take that money and they've earned and go right to the Shanghai Exchange and convert it into gold bars. It's effectively a yuan to gold backdoor. And the next vault, as we talked about, is being built in Saudi Arabia. And this is why you'll hear analysts talk about this petro-yuan to gold trade. Instead of taking dollars for any commodity, the yuan is now convertible into gold. It's not backed by gold, but it is immediately convertible into gold. In essence, the system is finding an alternative to the dollar-based system, which since 1971 has only been backed by trust and confidence. And you can see that that's slipping on many levels. And so I do think that this is the underlying reality that isn't getting better, nor is our fiscal responsibility. We are at 123% debt to GDP. Most of my career, any country at 100% would be considered a banana republic. And in just 71 days, we at $100 billion a week. How long can that go on? I think, people need to think about this. And maybe this is why you're seeing big money start to move into gold. The central banks have been front running it, and now you see Bank of America, Jefferies, Morgan Stanley, J.P. Morgan. They're all saying they're reassessing their outlook on gold all the way up to 25%. And when you see Michael or the big bond trader, the bond king for BlackRock, that Jeffrey Gundlach, say a 25% allocation to gold is not overweight. I mean, that's just unheard of to say that. Look, the deliveries off of COMEX, to me, really more than anything, are telling you that the most sophisticated traders in the West feel the same way. And if they're going to knock the paper price down, well, they'll cover their shorts and they'll stand for delivery. And we're seeing that. It's an emotional thing to see price fall the way that it did, but it is really done in a very irrational way that isn't being reported, and they're dumping it in a matter specifically to affect that type of sentiment and that type of aggravation.
Yeah, and you, having watched this market for decades, know what a rational, if there were a group of sellers who were trying to accomplish what would be normal profit taking, that kind of thing, what that would look like. And when you see this being reported as that, but you see the mechanics of how it's being accomplished being completely irrational, if that was the goal, if that were the goal, and it must not be, because it was done just in the opposite. It was made to accomplish. And then you see the physical off-taking. You know a lot more of the story than these talking heads on the mainstream. Can you tell us briefly, for those who are limited on time, about the weekly specials? I can share those. We have the 1 ounce Valcambi, the 1x10 Combi Bar, gold bar at $2.15 over spot. Any comments about that product?
They're neat. No question about it. It's like a Hershey bar. They're an ounce with 10 pieces that break off, each being 1/10 of an ounce. it's a very cool idea, a very cool concept to give you the utility of 1/10 of an ounce of gold if you break it off each one at a time. They're very popular. And I'll tell you that gold bars, Swiss gold bars in particular, which dominate the market, have become rather expensive because of the threats of tariffs, and the importers just haven't imported very many, and they're becoming very, very hard to get. The Combi bars have always been one that carried higher premiums because of the diversity and the ability to actually snap it off. They're very popular. They maintain their premium. Everyone should own a couple. They're very cool as well. I mean, not that's why you should buy a bar, but if you're ever going to show one of your buddies a gold bar, that would be the top of the list to do it. They're really neat.
This next one is eye-opening. 90% silver constitutional coinage, affectionately referred to as junk silver, dimes and quarters, dealer's choice, at 30 cents over spot per ounce.
I mean, there's not a better buy than that anywhere, period. And as you know, for over 3 years, from 2020 to 23, we would have paid people north of $9 over spot to buy it. And other than the Silver Eagles, nothing performed better. I went on a binge, finding all I could find everywhere, including buying $18 million worth. Well, in 2 transactions, it equaled to be $18 million worth at under spot value. How do you do that? Well, the people that I bought it from didn't hedge their positions, and when it went up, they were in great profit. And if we took it all in 2 transactions, we were able to get it below spot. And, you know, it's a deal that I can't believe it, actually. So when you look at premiums on everything being multiples higher than that, there is nothing in the silver world that even comes close to that value. Nothing. I think it's the smartest thing you can buy right now, period, in silver.
And just to underscore for everyone watching that those are coins that were made by the U.S. Mint. That's a big feather in their cap as far as trustworthiness and recognizability. Also, at a fraction of an ounce each, dimes are about 1/14 of an ounce of pure silver content, and quarters are about 1/5 of an ounce of pure silver content. From a preparedness standpoint, which is where our audience is near and dear to their hearts, there's nothing that can beat them in terms of barterability and being able to use them for small transactions for hand-to-hand transactions in your local community for food, fuel, rides, repairs, services, anything like that. So they've got multiple things going for them. Besides that potential that when people wake up as they did during the COVID crash, that the public demand for that relative to an inelastic supply can cause quite a spike in premium over spot. So being able to get them at a low cost can be a big beneficial to people in that. We also have the 1 ounce silver rounds, dealer's choice, assorted silver rounds at $2.99 over spot per ounce.
Well, that's the point. I mean, normally silver round should only be at most 50 cents an ounce higher than pre-65 constitutional silver. The fact that it's that much higher tells you something's messed up with the pricing there. And as far as I'm concerned, in all my career, I've never seen a better value when you're measuring it against everything else. You look at Silver Eagles, every dealer in the country is probably north of $8 over. You look at gold buffaloes, over $200 over spot is our cost, and it's because the mints can't keep up again. Now, this is with very little, tepid, if you will, public demand, but the big money is able, through purchases that have the same power as lots of small purchases, are pulling what they can off the shelves. And I think it's concerning, actually, because I'm the little boy who cries wolf, talking about this all the time. For over a year, I said this can't be, it won't stay at this level of availability and premiums. And just like that, look at gold eagles, look at silver eagles, look at gold buffaloes. They're starting to get very expensive again and very hard to get. That'll be the precursor into everything else moving. The fact that pre-65 silver is priced at this level, to me, is an anomaly and represents as good of a buy as anything you could ever see. Much better buy than those silver rounds, in my opinion.
Well, Andy, we're always grateful for your presence here. I know we have questions that we dealt with last week about detecting fakes and avoiding them, both from buying from reputable dealers rather than just random sellers on eBay, avoiding things that maybe are so low priced, below spot or whatever in quantity that it's too good to be true. For the most desirable thing to be priced way below market, it should be a red flag. And those are helpful, folks. If you missed those, they're in last week's episode. And if you don't want to miss a single episode with Andy, make sure you sign up for our free newsletter. You just got to put your email address in at our website, libertyandfinance.com, all spelled out, all one word, libertyandfinance.com. Put in your email address, click submit, confirm once on your confirming email, then you'll be in. You'll get one email per day. You'll get every weekly market update with Andy. You'll get all the weekly specials. You won't miss a thing, as well as all of our other guests. Andy, any final thoughts for us as we head into this last week of October here? Typically a volatile month. That's also true. Anything else that you're watching?
Yeah, no, I mean, Dunagun, I think that the important things we covered, and I think if this were tomorrow, I would probably have some other thoughts as we can see how this pull down was engineered and what kind of buying there was on the other side. At this point, I'll say no, I think we've covered it, but we're always here if we have to jump on. I'm always here if we have to jump on if something big happens. If not, we'll talk all about it next Monday. I'm sure there'll be lots to talk about, not only about this current correction, but also maybe anything else that has happened up to that point. Nowadays, things are happening at such a breakneck speed that I'm sure we won't be at a loss for things to talk about.
Well, we're grateful for your presence here, Andy. Just thank you on my personal behalf, but on behalf of all of our viewers and subscribers too. And thank God that I'm here today after that pretty harrowing experience last Wednesday, and glad to be here and grateful for every moment.
Likewise, and I couldn't be happier that you are here and that you did make it, and makes you think about the little things, stopping to smell the roses, so to speak. The little things in life maybe are a little bit more important than we often give them credit for. So glad you made it through safely, and I look forward to seeing you next Monday, God willing, as well.
Thank you, man. And so folks, you don't want your car to look like that.
Whoa. No, you don't.
So keep your eyes far ahead down the center of your lane, expect the unexpected, and realize that there's a lot of, that's another thing we could talk about another time, is you look at the statistics, it's quite interesting. The statistics of reckless driving, aggressive driving culturally across the globe, it is not evenly distributed, and the rate of accidents is not evenly distributed. And some of the changes that have happened rather precipitously in the last few years in numerous countries, particularly in Europe and the US, can be, if you just look at it mathematically, contributing to a marked increase in both aggressive and reckless driving that we're seeing around us.
And uninsured driving, I would argue, too.
And uninsured and unlicensed, and oh boy. So anyway, guys, take care of yourselves, take care of your families, hold your children tight, and just thank God for each and every one of you and your families. Andy, thank you for joining us again.
See you soon, my man. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 27th through November 3rd, 2025, while supplies last. First this week, 1-ounce gold Valcambi Combi Bars that can be broken into 10 1/10-ounce bars are just $215 over spot. Next, 90% constitutional silver is just 30 cents over spot per ounce. Finally, Assorted Silver Rounds are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.